Welcome back. Americans are getting back to spending money big. Take a look. Retail sales were up 0.8% in May. Remember, we got that number last week. Spending is up nearly 6% from a year ago. Joining us now is the author of Retire Inspired and Ramsey Solutions financial expert, Chris Hogan. Chris, good to see you. Thanks so much for joining us.
Well, thank you.
So you look at this as a bump up in spending and retail sales. What does that mean in terms of our overall financial picture?
Well, Maria, I think it's a strong indicator of the strength of the economy, but also the job rate is unemployment is very, very low. So people are very confident. The problem is that this confidence can relate to overspending when you start to look at retail sales. The increased spending in restaurants, home improvement stores, all indicates that it's summertime. And for a lot of people, they're unplugging and they're clueless as to what's going on financially for themselves and their future.
Yeah, it's funny that we're even talking about this, Dagan. We've been talking about a slowdown in the consumer. Stephanie Pomboy, one of our regular guests, our favorite economist, has been saying that the consumer is showing weakness. And then you got that blowout number last week on retail sales. And then you look at like Macy's stock, among others. It's doubled in the last couple of weeks.
And the Wall Street Journal writes about today the rising level of economic confidence among lower income Americans. There has been a big jump in confidence among the bottom third of consumers, followed in the University of Michigan's Consumer Sentiment Index. And Chris, a lot of that is it's higher wages. We've talked about, just an example, Chick-fil-A, the minimum wage out in California with one operator is going to be $15, but it's also this extraordinarily low unemployment for all Americans at this point, with a record low for Black Americans.
Well, it is. And Dagan, I agree. I mean, the confidence, unfortunately, gets equated to the stuff that we buy. You know, it's summertime, so people want to enjoy. They start to get this deserved mentality that they've worked hard to get here to summer and they want to have some fun and enjoy it. And listen, I'm fine with people buying stuff as long as they have the money. But if you don't have the money, it means you can't afford it. So using any kind of tool of debt is dangerous. It's putting yourself in a financial hole that can take you months, maybe years to dig out from.
Yeah. No, it's true, but what about longer term? I mean, longer term, if you need a plan in place, as you always say. You need a plan in place for what you want for your future and how to pay for it.
You really do. And having that plan means that you've sat down and actually taken the time to think about what is your financial reality right now? Where do you stand? How much debt do you have? Are you following a spending plan such as a budget? Do you have awareness? And I think, Maria, when people sit down and they start to look at this and understand if where they are isn't where they want to be, then they have to start to make some changes. You have to start to put a plan in place. The government's not going to save you. News reports aren't going to save you. You have to get intentional for yourself and your family.
All right, we will leave it there. Chris,
by the way, real quick, Chick-fil-A, it's $17 to $18 an hour, not 15. So I wanted to check that.
Makes you know what? That much more, 17 to 18.
You know what? Every dollar matters, Chris.
Yes,
we both know that. So if I get stuff wrong, I'll fess up.
Yeah, well, thank you for that. Chris, good to see you, sir. Thanks so much.